But let's move away from equities and now talk commodities. As promised, we have Manisha latest. Manisha, too much news in our markets. Tell us what's
credit to the crude price decline if the equity markets are doing well, and we have seen further decline come in for this one. So, you know, overnight we saw 5% of a cut coming in for the crude oil prices, and do not get in sense of a small green in the Asian markets right now, because we are at a 4-month lows, and this is going to be a 4th straight week of decline coming in for the crude oil prices. Well, every data, every event that has happened in this week has been putting pressure on the crude oil prices. To begin with, it has been about the weak global demand, the rising output and inventories that continues to weigh on. The China oil refining for the previous month fell by nearly 2.8% on a month-on-month basis. So the Chinese demand and refining clearly shows you that the demand is on the weaker foot there. The US crude output is at a record highs of around 13.2 million barrels. Also, the US inventories in last 2 weeks itself have surged by 17.5 million barrels. So we are looking at higher production, higher inventories, weak demand, all of that weighs onto the crude oil prices. And then there are various interesting statements as well coming in. You have IEA saying that they do not expect tight markets in 4th quarter as was earlier projected. There also is an interesting statement from ING which says that markets are expected to be in a bit of a surplus now by the 1st quarter of 2024. And that also led to decline. Interesting to watch would be the OPEC and allies meeting that is on November 26. Whether or not they talk about further cuts and how do they support these markets is going to be quite interesting to watch out for. Having said that, we did see nearly 10% in the month of October from the crude oil prices, and we are down by yet another 8% for the month of November so far. And you know, this is a chart that I have been maintaining from the beginning of this year, and it only interesting. We started this year with $82 a barrel on the higher side. It was a sharp decline by the month of June with all the weak China data coming in, and we saw $70 a barrel. 96 came in September as we saw markets talking about a tight 4th quarter. Also, all of that led to prices to go to $96 a barrel. By the 5th of October, we had gone down again, $91 by October 16th. We did see some support coming into the prices, but as you can see in the month and from mid of October, it has been a one-side decline that we have seen come in for the crude oil prices. Well, markets do say that at 78 as well, it does not look a very strong buy right now. 78 was a target, is expected to be a strong support. But if that gives away, then 75 perhaps could be on charts pretty soon.
Okay, well, Manisha, thank you very much for that. So that's commodities in focus at this point in time. We'll take